Now, for more on the economic recovery promises made by the President, I'm joined by Razia Khan, Managing Director and Chief Economist at Standard Chartered Bank. Razia, thank you for joining me this afternoon. Strategies, promises or plans employed people as a litmus test, is it not?
Well, this is always the case with the State of the Nation address, if you like, in terms of what was actually revealed, always very encouraging. But what we know from previous years is that the economic impact is going to depend very much on implementation. So some real positives being announced, this consistent emphasis on infrastructure that we've heard about for some time, the market perhaps yet to make up its mind completely around the affordability of that. The background to this, as we know, is that the South African economy had seen many, many years of exceptionally weak growth leading up to the COVID crisis. Then the contraction because of COVID, and of course, a great deal that needs to be done to try to boost growth prospects in the immediate aftermath. There is still great uncertainty.
Now, how soon can the announcement made by the President be practically implemented?
This is the key question. If we think of some of the mention that we had of key reforms in the electricity sector, a renewables bid round, that of course has been awaited on for some time. And there is a sense hearing these measures being announced again that shouldn't this have happened in an accelerated way? Shouldn't it have happened already? The same thing around the issues with the spectrum auction. There had been an expectation at one point in time that this would be completed in the current fiscal year, that is, before the end of March. Now, there have understandably been some COVID-related delays, but there is still a sense that there are many policy promises that are made, and implementation is absolutely key. South Africa's starting from behind in a sense, in that we just haven't seen a rapid enough and accelerated enough rollout of these policies. Once again, markets are willing to give everything the benefit of the doubt. We know that we're in a firmly risk-on environment. The rand has been gaining. The expectation is there may be a little bit more fiscal space than had first been considered, that maybe the slump in tax revenues ahead of this budget was not as bad as had initially been projected. That said, we also know that the crisis has cost South Africa a great deal in terms of its macroeconomic positioning. The threat now isn't just what can be done to boost growth, but what can be done to boost growth in a much more fiscally constrained environment where spending decisions will have to be weighed very carefully. There isn't any fiscal space necessarily to allow for a great deal more investment coming from the government itself. One of the key themes last night was that the private sector is going to have to play a role in this, or the growth generation doesn't necessarily happen. The big issue, as we know, overriding everything is the amount of indebtedness that the South African economy faces. Even in more normal times, getting that growth acceleration going would have been tough. It's much more of an imperative now, but there's even more to be faced in terms of the challenges, more to be overcome in order to get growth going again.
Well, this morning, the Gauteng Premier, David Makhura, announced a mega investment, $1 billion by Ford. What do we read into this?
So that has been one element of good news. And the South African economy hasn't really seen very much of this in the past, to be fair. Even going way back in time when the growth rate was better than it has been in the recent past, South Africa did less well in terms of attracting that sort of foreign direct investment. It's good news, but no one should expect that one bit of good news is going to be a game changer. Some of the elements of what was discussed last night, more action to be taken on governance, more action in terms of improving the effectiveness of local government, looking at the qualifications of people who get involved in local government. This was all very good news. The related reforms in terms of measures that could have been taken a while back, what needs to be done to make it easier for people to visit South Africa in a post-COVID environment, all of the discussion around e-visas, All of this could, as well as making it easier for the country to import the skills it doesn't necessarily have, all of that could add very meaningfully to the business environment. But once again, there is a need for a sense of urgency as well as perspective. First of all, the realization that South Africa hasn't done especially well on these fronts in the past. The urgency that in terms of getting the growth going, more that needs to be done to accelerate growth momentum, given the recent shocks experienced by the economy, that urgency is now paramount.
And we talk about the involvement of private sector in all of this. Now, as a representative of the private sector, what do you see as your input into the recovery of the economy?
So it's one thing for government to say the realization is we're trying to face down significantly higher debt ratios. There isn't going to be the fiscal space for government to do this on its own. Therefore, the best that government can do is provide as conducive an environment as possible, boost the doing business environment, make it easier to do business, and the hope is that there will be enough confidence for the private investment to follow. Now, if we look at some of the promises that have been made, or the pledges rather, that had been made in past years, the areas where significant fixes were needed, if you like, were evident for some time. Electricity remains a big stumbling block. The ideas on how to fix electricity had been out there for some time. Implementation had been slow. In order to make a meaningful impact on private sector confidence, implementation needs to be taken more seriously. Implementation needs to be accelerated. The intent is fine. Delivery is important.
Now, the future of South Africa rests to a very large extent in the hands of young people, many of whom are currently unemployed. In fact, 55% of young people remain unemployed. What role can private sector play in this process? Speaking earlier to...
The numbers on youth unemployment have long been alarming in South Africa. And to talk about urgency in the context of post-COVID growth, post-COVID recovery, we're not yet clear what the lasting impact of the COVID crisis will have been. We're only now getting a sense of an economy reopening very gradually. South Africa is by no means over COVID completely. There's still some way to go. It is a long journey. But the question is, what more can be done to create that conducive environment to boosting employment? What we do know is that employment is something that economists regard as a lagging indicator. So for some time after a very significant economic shock, it may be the case that the unemployment numbers keep rising. Let's not forget that on the eve of the COVID crisis, unemployment in South Africa was at 30%. Youth unemployment has always been significantly higher than that. And then we had this aberration where there were people who were leaving the labor force, people who were not able to go out there and seek jobs, partly because of the COVID containment measures. Over the coming months, we're going to get a much more real sense of just how much lasting damage has been done to the economy. We're going to get a real sense of how much more there is a need for everyone to pull together to try to deal with the reality of unemployment levels that are unacceptably high. The reality is that there are few alternatives other than boosting broad-based demand. South Africa needs to see a restoration of growth. There is very little else that will make a meaningful difference to unemployment. Any policies that help in this regard, and the good news around the SONA, if you like, was that it did raise optimism. It still manages somehow to raise optimism that the future is going to be different, that difficult issues are going to be tackled, that things are going to be done. But the extent of unemployment in the economy and the challenges, the very severe challenges that still lie ahead, should underscore the urgency of action to everyone.
Razia, finally and very quickly, if you will, the impact of corruption on market confidence. I mean, you've talked about the market determining how things pan out, if you will.
If we look at at what's happened in financial markets, there's long been a sense of optimism that something will be done. The words we heard last night in the State of the Nation address provided further reassurance. This is an important issue. It's going to be taken seriously. It will be taken seriously on multiple fronts. But markets are still impatient for some level of success, some clear markers that not only are things moving in an improved direction, but there is conclusive evidence of actual results that this is being tackled. Add corruption to the long list of challenges that the South African economy has traditionally faced. It's not been an environment that's necessarily been hugely conducive to private investment. There has been uncertainty. We can now add macroeconomic uncertainty to the long list of potential challenges. So anything that can be done to tackle an issue that has weighed very heavily on investor confidence will be positive. Some significant wins in terms of that demonstration around what is being done regarding past state capture, what is being done to strengthen institutions, to ensure that it can't happen again. All of these would have some impact on private sector confidence.
Razia Khan, Managing Director and Chief Economist at Standard Chartered Bank, thank you so much for speaking to us.